Well, 145%, 318%, and 206%. Now, these are not long-term returns of some stocks that were held for decades. Now, this is how much Mazagon Dock, Cochin Shipyard, and Garden Reach Shipbuilders have returned to their shareholders respectively in the first 6 months of the year and the first week of July put together. Now, these are the kind of moves that these PSU shipbuilders have seen so far. Now, last week itself, all of these three names were up at least 30% each. Now, at the start of the year, these three shipbuilders put together were valued at close to 75,000 crores. Today, that is the value of one Cochin Shipyard alone, which has been an outperformer among the three. Now, Mazagon Dock, which has seen the biggest moves among the three in the last week, crossed 1 lakh crore in market cap on Friday and even crossed 1.1 lakh crore. The stock had an IPO price of 145 rupees. In under 4 years, that stock has surged over 3,500%. Now, Cochin Shipyard's market cap from just under 20,000 crore at the start of the year is also nearing 80,000 crore rupees. Garden Reach's market cap too has tripled along with the stock price. Now, with these kind of moves, the valuations would be the first thing that would come under question. Mazagon Dock's valuation cannot be compared to its 5-year average since it listed only in October of 2020. But take a look at Cochin Shipyard. It is trading at an FY26 estimated price to earnings multiple of 62 times. Its 5-year average, 14 times. Even Garden Reach is trading at 50 times 1-year forward earnings, while its 5-year average is just 16 times. Now, investors who have held these shares would certainly be laughing all the way to the bank, but the bigger shareholder who is doing so is the government. Now, the June quarter shareholding of these stocks is yet to be uploaded, but as of March, the government had an 84.8% stake in Mazagon Dock, which is above the minimum shareholding norms. Now, there have been reports doing the rounds of a possible OFS, and if that happens and the government does sell that excess stake to comply with the MPS at Friday's high, it will fetch them well over 11,000 crore rupees. The government is MPS compliant in the other two stocks, but its value in these have also seen a substantial bump up after this move. Well, they say put your money where the mouth is, and the small shareholders leave no stone unturned in trying to be part of a trend. Now, take a look at this. Both Mazagon Dock and Cochin Shipyard had close to 1.6 lakh small shareholders, meaning those with an authorized share capital of less than 2 lakh rupees. Now, as of March of 2023, this is the figure. Now, in just a year, that number is nearing 4 lakh. Now, Garden Reach, where the number has also doubled from just under 60,000 to well over 1.2 lakh. But then who has been selling these shares to the small shareholders, particularly in names like Mazagon Dock, where there is a lack of float anyway? Well, no surprises, but institutions. Now, institutional holding in all three stocks has declined from the levels of March of 2023, with the biggest drop seen in Cochin Shipyard. Just a disclaimer, we are considering institutional shareholding as both domestic and foreign holdings combined. All three do not have significant analyst coverage as well. Mazagon Dock has 4 analysts tracking the stock, with 3 of them having a buy recommendation. However, Friday's high of 58.59 that the stock has seen is well above its highest price target of 3,724. Now, ICICI Securities came out with a note in June with a sell rating on Mazagon Dock with a 900 rupee price target, saying that all the positives are priced in. Now, since that note was released, the stock has surged 75%. Such has been the frenzy. Cochin Shipyard too tested levels of 3,000 rupees on Friday, which is also higher than its highest price target of 27.59, and it also has 6 analysts tracking the stock. The extreme here is that the lowest target on the stock is 740 rupees. Now, Garden Reach has 3 buy ratings out of the 5 analysts that have coverage on the stock, and that too trades above its highest price target. So this is how the shares of these shipbuilders have done recently. For those who have the shares, they have been nothing but a lottery ticket. And a move like this would always warrant some caution, but there are still enough and more shareholders who would be wanting to buy at these prices. The last thing they would want to hear is that ship sailed long ago.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions. on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube.
For more news and updates, all you need to do is follow CNBC TV 18 on all of our digital platforms.